Well, let's welcome in Sandeep Bhatia. He's our market master of the day, managing director and head of equity India at Macquarie Capital. Sandeep, good to have you with us here. Thank you for your time. A lot of FI selling last 5-6 days. Sandeep, let's just get a quick sense from you on that. Do you think most of it is done? And presumably this is all, as we've heard from many others we've spoken with, to fund what's been going on in China, which was like a lot of shock and FOMO in a positive way. But do you think a lot of it is done?
So I think Indian market will definitely face continued headwinds at least till end of this month and possibly in November too. I think there's definitely a good bit of valuation correction that the market needs from here on. So yeah, I think China is just one reason why India will see some outflows from FIIs. But the underlying reason is the fact that valuations had got to levels where definitely they cannot be justified, especially in the small and medium cap space. So this correction is actually, I think, healthy and welcome.
Sandeep, just give us a color on what kind of this selling that we've seen from FIs. Is it a lot of long only? Is it fast money, hedge funds? I mean, just give us a sense.
Both are selling. Hedge funds are also selling, and so is long only.
But at the levels, is it predominantly one or the other?
Well, it depends on a single day that you are looking at. I think initially the hedge funds are the first to move, but the long onlys follow. That's how the way it is. So I don't think we should at this stage and at these levels in the market, FIs will sell across the board. It's too premature to say that one will sell more than the others. It's just a short-term thing that you may see someone selling more than the others. But yeah, there is definitely a good money made in India, and there's profit booking, plus there's overvaluation, so corrections need to happen. All that is happening. In fact, the spate of IPOs and the spate of promoter sellings, which we are seeing, was clearly indicating that the market was overvalued. If the person who's running the business and owning the business thinks that it's overvalued, then definitely it's overvalued.
Just to finish the point, Sandeep. So the indication you're getting, and you'd be dealing with most FIIs, is that they're more inclined to sell more at the margin, incrementally.
At the margin, there definitely would be sellers, and they need to fund the IPO pipeline. That even if they are not taking money out, they would still need to fund the IPO pipeline, which India is offering them. So I'm not saying that people have lost interest in India or the IPOs are not going to get subscribed. I think all that will also happen. But it's not that more money can continue to pour into India regardless of anything else, regardless of China's performance, regardless of valuations in India. No, that is not the case. So I think there is definitely a rebalancing and cash flow management that's happening.
Sandeep, great to have you on. Really interesting times, right? In the last couple of weeks, and they say in the market, the only risk is the one that you haven't factored in, or the one that is unknown. And that's exactly what played out, because no one was anticipating this level of FBI selling and what that could do to the market. So, okay, let's talk about, the issues at play here. FPIs did not sell when capital gains tax was hiked. They did not sell when there was volatility on the election front. But they chose to sell. The trigger was this big move in China. Now, if the China rebound doesn't play out, and if it ends up being another bear market rally, I know that's a big if right now that we're working with, given the morning announcements as well, then what happens? Then does it go back to BAU for India? So in theory, then does it remain a buy on dips market, which is what we've seen since COVID?
So I think good question. So let me just give you a bit of a context. When you had MSCI India weight in the MSCI, which is the index which most FIIs would look at, equal to or even slightly moderately higher than China, that was clearly a big trigger. There's no way the Indian GDP or the Indian economy is as large or as diverse as the Chinese GDP, as China's economy. So clearly the market was quite richly valued. On the other hand, China has been extremely, in the doghouse, and it's been coming off for a couple of years now. So is this a trading rally for China, or is this something which can have longer legs? Macquarie view is that China will not be a structural growth driver for the global economy that it has been for the last 20 years. But definitely there is a case for a trading rally, and that trading rally can last for a couple of months, right? It can last, after the presidential election, it can last up to beginning of next year. So I think October, November, December would be a good time for a trading rally in China. And therefore, to some extent, there will be profit booking and money, getting off the table in India as far as FIs are concerned. But if the China rally fades, which I think most likely it would, because the geopolitics between the US China is still very negative. Whoever wins the presidential election in the US, definitely there will be trade barriers and tariff barriers erected. And I don't think even Europe or India are necessarily welcoming Chinese imports. So all said and done, this rally in China would definitely fade in the next year. In that event, India has much longer legs. Macquarie believes that India will continue to do well, and in fact, Macquarie believes that US, Japan, and India are the three big structural markets of the world. So that's where we will be, but that may take some more time.
Just to clarify, you're saying the trading rally in China that could continue till the end of the year, right? Till about November, December.
Yeah, yes. Once the new administration is in place, once their policies
in the
are
US,
once the policy and tariff barriers are unveiled, then the issues on China's growth will come to the forefront, which are not right now. And anyway, a lot of this money is coming from within China. This trading rally is also fueled by retail Chinese investors. So if we have retail Indian investors, we have to remember that there's similar or bigger Chinese retail markets. So all of them which have been inactive, I'm told, there are various photographs going around that, during the Golden Week, during the holiday period that just ended in China, everyone was reopening their brokerage accounts in China. So clearly that's what's happening.
All right. Hi, Sandeep. Just coming back to you, but I just want to focus on one stock, DLF. That stock has spiked to the high point of the day. I think the street is taking note of the outcome of the Haryana elections. And sometimes, in fact, you do see that, sometimes it's trying to extrapolate that maybe, in fact, the government that comes in could be more favorable for this. That's at least the thought process. So explains why that stock is up close to around 1%, though that's market's way of seeing things. Sandeep, I wanted to ask you about the state elections. The markets took the general elections in its stride. We got a coalition government with Prime Minister Narendra Modi at the head. So they digested that. They said policy continuity will continue. Now the problem is various states, appear to be going against the ruling NDA. Whether it's Haryana, whether it's, the street is bracing for Maharashtra election outcome as well. How important are the state elections from a market perspective?
State elections are important. They give an indication of where the political mood is going, and therefore I think definitely the state elections in Maharashtra, which the dates are still to be announced. Then there is of course, the Bombay Municipal Corporation state elections, which will happen. And then there would be next year the Delhi state elections. So we have a slew of elections. As I always tell investors, India is always in the election mode. So if you think that the general elections are over, then that doesn't mean anything. We'll have the state elections come through, which are quite important. So to answer your question, yes, state elections are important, but more from what it gives a political message to the ruling party. I think the political message which the ruling party got was that the prosperity that has come through should be more widespread, and therefore I think we see the announcement of more fiscal spending and consumption stimulus, which is happening. I think these state elections will reinforce that message for the BJP, and to that extent, I would definitely think that we will see more competitive welfareism come into play for the next budget.
All right, Mr. Bhatia, thanks a lot for joining in and giving us your take on the markets and how you see things shape up as well. For the time being, the markets have seen a bit of a recovery. The Nifty up close to around 40 points, 30, 40 points, but it's very, very swift out there. We're back down to around a 20-point gain.